Hi, this is Triffany Hammond with TriffFX, and I'm here to talk to you about how I support and resist, how I trade using support and resistance. I like to drill down from a larger time frame down to the time frame that I like to trade. And the reason that I do this is because having a larger time frame to start out with gives me a better context for price action and a better feel for what the market's really deciding to do big picture, so that I can make, at least in my mind, better decisions on my smaller picture. For me, that is a daily to a 4-hour to a 1-hour chart. For you, that might be 1 hour to 30 minute to a 15-minute chart. The idea, though, is just keeping a feel on the overall pulse before we make our market decisions. And the nice thing is, too, when we broaden our scope to a larger time frame, not only does it give us that bigger context, but allows us a chance to make a trading plan, right? So much of what we do as traders is just trying to determine what makes sense for the if this, then that scenario. If we have that mapped out for ourselves to begin with, we're much more empowered during the course of our trading. Now, those of you who trade super short-term stuff, that may not be, a real trading plan may not be a viable option, but certainly going at least one time frame larger is going to give you a chance to get a feel for the direction the market is going, and it's going to prepare you for the decisions you're about to make on the time frame that you trade. So let's take a look at, oh, we already have a question. What higher time should I look at if I'm trading 15, I'm assuming that's minutes. If for 15 minutes, I would go 1 hour to 30 minutes to 15 minutes. If you like to pull the trigger on a 15-minute chart, make your large context the 1 hour, your interim context the 30 minutes, and then the 15-minute time frame would be great. And if we have time, we can actually even take a look at a trade like that. So let's get started here. We're looking at the pound dollar daily chart. Pound dollar is one of those that took a beating over many, many months, and is actually trying to make some steps toward recovery now. Now, if we didn't already know that from just being traders and being a part of the news, obviously that's here written in the chart, right? Every black candle's a sell, every white candle's a buy. You can see here that we definitely have higher or lower highs and lower lows all along this channel right in here. What's been going on recently is we had a couple of things in here tell us that this trend was tiring out a little bit. For starters, it's been going on for a very long time, and the market likes to correct itself. So even in a context where price has been going directionally for a very long time, even if it's not going to completely pull back, pauses are normal, right? We have tendency to kind of see things consolidate and go sideways as a sort of pause in the game, or resetting the game, as I call it. We do have some levels here on the on the daily chart that are significant. This one was recently touched up here. When this price left this area of indecision in here with such enthusiasm that it didn't look back, it left this price level at 1.5328 untouched. It didn't retest it, which is not typical when something leaves an area of indecision. Generally what happens is you get an area of indecision, a decision made by the marketplace. It'll come up and tap that area again, and then go further on down. So for starters, the fact that we had an area that was not touched is always significant in my mind. I like to label those as just retracement levels, areas that I expect the market to return to at some point. Now, that is a very counter-trend idea. I'm generally better in trending conditions for my trading style, but I would like to keep those in mind, because as things start getting tired out, and as we start to see rejection of support, look at this huge shadow down here, rejection of support on this day, It tried to pull up, it came back, and even though it came back short, it rejected support again. We had some good enthusiasm up to that price point. That price point has been retested now. So I can actually take that label off. Okay, so what I do have above here, though, even though this level has been retested, you can see that here at 155.60 is a significant level of support and resistance, where this area of indecision did respect that area for quite a long time. And not only that, but it did go back and retest it once it stopped using it as support, it went back and used it as resistance. So if I have an analysis that gives me a bias to the long side on this pair, that's going to be my next profit target. Doesn't that make sense? An area that the market was fond of before is likely to become an area that the market is fond of again. What we do have now that we've talked about this larger context on the pound dollar, downtrend, retracement, area of indecision, consolidation, all of that. Once we look at this on a 4-hour chart, we're going to see much more definitively that actually in this most recent price action, we've been getting higher highs and higher lows. Is this the potential for a new uptrend? Is this what we're seeing now as the beginning of the next wave of this pair? And could it be counter trend? Could it then become an uptrend up to that point? At this point, we don't know. Really, honestly, at any point, we don't know, right? At any point, anything in the marketplace is anybody's best guess, and that's what makes this business so difficult. That's what makes trading so risky. But what we can do as we come down to our lower time frame is we can take a look and see what price is doing on this lower time frame. So we've identified our higher highs and our higher lows within the context of a downtrend, right? So my immediate bias as a trend trader is to the downside. I'm not going to ignore the upside. I don't mind playing the pullbacks, but that creates a bias for me on a support and resistance, from a support and resistance perspective. What I have here on the 4-hour chart, remember we talked about those areas that have not been retested. It came up, made a new higher high. Lots of indecision on this short. Right at the beginning, the market was really not that decided. You can see here we got this candle here was fairly decided. But immediately we've got small bodies, long wicks, long shadows. You don't have to know anything about candle patterns to understand that this is indecision in the marketplace. The buyers and the sellers are wrestling for control over the pair. Nobody is really entirely sure which direction this is going to go. We did slowly start to build some selling pressure here, or buying of the dollar, right? We did start to see that. And as it picked up and broke this level of previous resistance, it did not treat it as support and in fact broke through. What did it not do? It didn't retest, right? So we have an area in here that is a retracement level. That's going to become significant to me because if I see bounce-like behavior, and we've actually already seen that trigger here, coming off of this support, that's going to make a reasonable profit target to be able to hit. Not only is it nice that we have an area that hasn't been retested within this context, but we are talking about a counter trend trade, right? We're going counter to the downtrend we identified on the daily chart. So anything we're going to do counter to that, we want to be able to get a nice close profit target and not get too exuberant about the ultimate extremes. Those are going to be harder to get to when we're going against the trend. Not impossible, not unlikely, especially when they haven't been tested or retested. But those become more probable when they're closer to the middle of the range. So what we're seeing here now on this support rejection in here, we do have, you can see a longer shadow here indicating some rejection of that support. We also have, oops, I just moved my little channel there. We also have the fact that it popped up here and came back down and is rejecting right near these bodies. Let's put a line on there and see how close that wick came. Right near these bodies, a similar area of secondary support right in here. You can see this little upside down behind the shoulders. Here you can see this wick nearly came down and touched it. So this is actually, even though it doesn't come down and hit the same level horizontally, it's a significant signal still, isn't it? Because price has tried to come down and has rejected support one more time. This could potentially be on a 1-hour chart, something that looks like a double bottom. Just out of curiosity, I'm going to see where that double bottom takes us. And that, oh gosh, look at that. Isn't that great? A 100% extension move of the most recent price action is going to take us to this little secondary high in here. You can see where it bumped up here, nudged way up, and it paused here again. But I actually like that retracement level much better, and it hits at the 161.8. So, behavioral psychologists are going to like that level much more. there goes my channel. Sorry about that. So with that in mind, I can then look at the 1 hour chart. Even though my overall bias is to the bottom, or is to the short, long term, I can look at these interim places as an opportunity to take advantage of the trade. Now remember, this is not technically a double bottom until it closes above that neckline. So that double bottom may never trigger. This isn't something that I'm saying get into now. I'm saying watch for that as a possibility. What we're seeing here on the 1 hour chart gives us an even sharper picture of the indecision that is going on in the marketplace right now. Look at all this selling enthusiasm that brought us down to the support level. And then we had the buying enthusiasm picked up fairly quickly, fizzled out, and then here against this secondary secondary low right in here, we had an enthusiasm that matched the buying, only this time to the selling, and look at what we're getting on the buying side again. This is that push and pull, that total indecision by the marketplace right now makes for very choppy trading decisions. Those of you who are scalpers are probably doing extremely well this week. For people like me who are interim kind of breakout traders, I'm luckily not getting a whole lot of signals. For personal reasons, I've decided not to trade this week. I just have too much on my plate. I can't focus. I can't manage my trades well, so I've decided not to trade this week. But also, in looking at the push and pull that's going, it was just confirmation that it was not going to be a good week for me. And looking at the fundamental calendar, we've got good news, bad news, good news, bad news all over the place. That kind of push and pull isn't something I want to get chopped up in. Looking at the technicals, huge areas of indecision, lots of whipsaw action. The buyers and the sellers are making equal blows. One is hitting as hard as the other, and that makes it really tricky to trade. But if this starts to do, rather than play out this double bottom, if this starts to do what's typical for currency pairs to do in times of indecision, and that is start to triangulate, start to tighten up in here, what I would be willing to do when I'm ready to come back into the marketplace is identify the larger area of consolidation, let that tighten up. It kind of spring loads everything. If you can imagine the kinetic energy that's built up as the buyers and sellers get wound up, and the fighting gets heated and much more volatile. The swing that happens out of this tightening up phase in here, and I'm imagining it'll probably be right about in here. Then I'd be willing to take a option, because then when things do start to trigger, I don't feel impulsive. I don't feel as though, oh my gosh, the market's moving that direction, I need to jump in. Because that's really when you start to make really poor decisions. Your adrenaline's rushing, your emotions are running high, and you just dive into the market because things are moving. I'd much prefer to be able to take a step back, have a plan in place, and a reason to go long and a reason to go short. There are times when I have a reason to go one direction but not the other. If it breaks out in the direction I don't have a reason, I skip the trade. I don't have a plan in place. There's nothing about that trade that is going to be methodical, planned, and manageable once I'm in that trade. So I simply do not take it. Okay, got some questions here. Radio Star says, but isn't some of that indecision caused by the market moving UK budget due tomorrow? Well, there's that, and we've got some European Union leaders meeting, and there's a number of different things. Kind of, and interesting, I'm actually kind of glad you brought that up, because there's the big stuff, these conversations that need to happen, right? That people are on hold for. But in addition to that, there's the little day-to-day stuff, that economic calendar that comes out every single week and every single day. This is why you can't avoid the news, because there's constantly news announcements, right? But even that little stuff, if you look on the calendar, one is projected to be good news, one is projected to be bad news. And it's for all the economies right now. So there's just not a whole lot of reason one side of the trade or the other. And I'll tell you, if the market doesn't have a reason to rally, I'm not going to rally. I'm not going to get really excited, because I don't have enough money to do anything to price. I have to jump on the bandwagon, right? I have to wait for there to be a bandwagon. And in my opinion, this week there isn't one. So that's just my opinion. Bill says, I know you use the 1 hour, 4 hour, and daily charts, but what do you use for overall strength for best direction, like pound a day? I wanted to take it short again, but whipsawed. Yeah, it's overall strength is something that I've kind of. This is really subjective. What I'm about to say is really subjective because it's hard to identify tops and bottoms. And I'm going to go back out to that daily chart. The euro dollar has a much better example of this, but I'm going to show you kind of what I like to see. We had on the pound dollar a lot of consolidation in here, but based on this new downtrend here, I'm going to show you kind of this is with the benefit of retrospect, and this is why this is subjective. When we start to look at new areas of indecision like this as potential bottoms to this trend, right? It could potentially be a bottom. It could. What I like to do, though, is I like to see is the trend, how tired is the trend? And I have this idea of kind of 3 times extended. And there's on the 1 hour chart and even on the 4 hour chart, actually the 800 serves as a really good sort of midpoint. The 800 simple moving average works as kind of a good home base for currency pairs. And so sometimes I'll take this 3 times extended away from consolidations that happen around that as well. But certainly it's even more meaningful in my larger context, looking at what I can now identify historically as the recent high of this little downtrend. I say little because if we talk, long term, I mean, this little leg here doesn't compare to anything like this, right? And truly, this is merely just coming out of this consolidation. So if this is going to have a strong run, it's still in its baby phases, isn't it? This is a weekly chart. Back to my daily chart, what I'm talking about, now I have to go all the way back over here, take that back off. My 3 times extended. I like to take fibs off the recent price action of the big consolidation area that generally happens before the market picks a new direction. Come on, there we go. Like I said, this one's kind of choppy. The euro dollar does a much better job showing this definitively, but different phases of the market, different pairs, they all react differently. So here's the most recent action of this larger consolidation area. You can see here how it came down. It did touch this 200% extension level, which is just 100% of the range it was willing to move before. That's all it is. Off of that, it bounced up, retouched that previous support, and came back down and gave me a new consolidation level just below that 200%. This one's significantly tighter than the larger area. That's actually, the tighter they get, the more clue that is for me that the trend is starting to wear out. So the fact that this went from pretty big to fairly small without an interim size is pretty significant. So right in here, I already had a clue that things were starting to get tired. You can see here it came down and gave this to me again, this 200% extension level, tagged it, and rather than giving us a retracement back to previous support, it gave us this one tiny little area of indecision, this one little body to use, and of course has already hit that extension level. Right now, this large consolidation area is right inside that overall, that third time that this has extended itself. So, in terms of overall strength, what I just showed you in terms of 3 times extended, I can do on any time frame, and it works like a charm. When things are new in their movement, that strength generally comes off of a nice broad range that the pair is willing to move. As soon as things hit that second extension level and those moves become smaller and smaller, I know I'm losing that overall strength. So even if you were on a 1 hour chart trying to take your signals off of a 15-minute, if your 1 hour chart is starting to lose some of that extension strength, that's a really good sign that you may not have any strength inside either direction of the trade that you're considering. Again, sometimes, folks, it is about making the decision to not trade. I know that's extremely difficult because we work so hard at developing our systems and we work so hard at understanding the marketplace. But there are times when things just don't align with the way that we trade. Like I said, scalpers this week are probably doing awesome, but these aren't conditions conducive to my kind of trading. So I have to have the willingness to step out. For me, it works out nicely because I had personal reasons as well. But sometimes we have to say, you know what, the strength isn't there one direction or the other. I'm not taking a trade. Bill, did that make any sense? I hope that answered that for you. Do I take into consideration weekly high and low, support and resistance, and the same for monthly? Sometimes. If I'm at a place and I don't know if I have another reason to go lower or higher and I have to find a new support and resistance level, I will have to go out and, the case of the pound dollar, go out to the weekly and find that next support and resistance level. So there are times, but generally speaking, if I start muddying the waters with too many time frames, if I try to do weekly, daily, 4 hour, 1 hour, and then maybe I want an even better entry on a 30-minute chart, then the analysis starts to become so separate from, one time frame to the next that it can actually confuse your overall analysis. It can confuse your ability to actually take a signal because there's too many conflicting signals. Yeah, you're welcome. Awesome. Great. I'm glad that made sense. Do you ever use trend lines? I like trend lines on yen pairs. I don't care for them on the majors. Yeah. Pound yen in particular is a beast with trend lines. It's awesome. But even when I use trend lines, here, let me show you. This would have been a fake out trade, but I'm going to show it to you anyway to show you what I'm talking about. If I'm looking for a trend line break, let's say I've done my 3 times extended on the daily chart, and I'm looking for a trend line break as a possible entry for a counter trend position. Okay, so here's my daily trend line. This is on the pound dollar, and what I'm about to tell you stands true for me on any time frame. On any pair. Even though I like trend lines on the pound yen, I still want to combine that trend line break with a break of the horizontal support and resistance. Actually, this trend line, yeah, no, that's right. That's where it was. Okay. So I'm not going to be happy. This doesn't illustrate my point. I'm going to change the trend line just to make my point. Let's say before these candles happened here, okay, you had a trend line here. This was a little double bottom. Maybe I might have been willing to take a long position with the idea that at least I'd get a retracement up to this area that had not been retested, right? I get support rejection here, support rejection here. This starts to look like a good setup, but seeing it close above that trend line is not going to be trigger enough for me. I want to also see it close above the support and resistance level, the horizontal level that was created during the area of indecision before the break. So for me, that would have been this signal right here. Okay. Now, somebody who takes the trend line break and does not wait for the horizontal break, they're going to get a better risk to reward on the trade, on the trades that are taken. But they're going to have a lot more fake outs because what can happen, remember that triangulation we talked about, as things tighten up in their area of indecision, what can often happen is this is willing to break the trend line but only to a secondary high, and then it starts to make a secondary low, and then a new lower high, a new higher low, and things kind of tend to go sideways all the way over to an old trend line, old price behavior, and it may never actually really make a long position to reset the game. So the person who takes these trend lines are going to get a better risk to reward on the trades that do hit profit target. They're going to make more money than somebody who, like me, waits for the horizontal break. But they're going to get a lot more fake outs. Somebody like me is going to get a worse risk to reward ratio, but I'm going to have more winners, whereas the other person is going to have more losers. So it's a trade-off. And a lot of it is going to depend on how you want to manage the trade. How, are you stacking in positions? Are you starting with 2 positions and taking one off with an interim profit target? Are you, what's your option? what options are you using to make your trading system work as good as it can possibly work for you? And that depends on your psychology, plain and simple. Okay, getting rid of those little boxes. What did I have over here? Okay, so I answered the trend lines. Could you go over how you draw fibs? It seems in reverse direction. Oh, sure. And then, to find support on a monthly, weekly, daily, 4-hour would be powerful zone. Oh, I see what you're saying. Yeah, it would be, but honestly, to me, it just muddies the waters. But I'm not saying that wouldn't work. Certainly backtest it, try it. If that's something that you're being drawn to, there's a reason. Give it a shot. Overlap some layers. I know that there's some people that will do what you're talking about with fib levels. And that's kind of fun, where they'll, take, say, this consolidation area. I'm not going to use this one down here because it's just too muddy and messy. But say take this one, and then on the 4-hour, when they get this little area of indecision, they'll overlap that. And where they're, oops, it doesn't work out so hot. And where that 200% level hits the 150, that becomes their profit target, or something like that. That they'll overlap and find those overlapping zones as places to either trigger a trade or get out of a trade or whatever. So that's definitely a viable reason, or a viable option to test and make sure it works. It's just not something I do. Okay, so going over how I draw fibs. Bill's saying it seems in the reverse direction. I'm not entirely sure what you mean. So, Bill, as I'm talking, if you would clarify your question, I'll be happy to talk about it. But I can at least tell you what I've done with my Fibonacci is my Fibonacci levels. I've really only used them as a cheater way to find 100% of the range. What I used to do, and it was silly, I did it for forever. It was ridiculous that I did it for as long as I did it. But what I used to do is I would just measure the consolidation range. So I would say, I'd grab here, and I'd go to there, and I'd go, okay, that's 315 pips. So from 1.5185, I'd add 315 to come up with my profit target, blah, blah, blah. And you can do it that way. It just takes longer. And finally, I had the dawning dummy, add an extension level on your fibs, and that's going to measure the exact same thing. So that's what I did here. And then these just mirror the levels that are by default in the Fibonacci levels anyway. I know some people use other levels in here, but I'm happy with these. These work out really well. Right around that 150 mark can be a really typical place for things to bounce and pause. So I like having that on there, even if my profit target is the 200% extension level. I like having that interim spot in there because it's going to trigger for me the possibility that the market's pausing and bouncing. And that's going to allow me to be patient with my trade because I know that's a typical place for it. Does that make sense? Like that's my if this, then that scenario. It can also be a nice interim profit target, that kind of thing. So, Bill, I don't know if I answered your question about fibs or not. See, make sure I didn't miss any questions. Just didn't scroll down on me or anything. But yeah, that's what I do. Oh, and because people sometimes ask, how did I get the price up there? This is a neat little trick. In MetaTrader, you go to Fibo properties, and on whatever level you want to see the price show up, you put whatever label, for me that's the 200%, the @ symbol, which is what you see here, and then $$ will just give you the price. So that's pretty nifty. Okay. Could you do it on the 4-hour pound? Seems like it retraced to 61, but rejection. Besides, oh, sure. I don't remember what I was, I think the place I put the pound or price on was the treating this as a potential double bottom, right? So I had taken the recent price action. Oh, here's another tip. In equities, if you're doing head and shoulders, double bottoms, double tops, whatever, in equities, the rule of thumb is to take the largest dip or peak. In Forex, take the most recent or the smallest. Usually the most recent is the smallest. That's a much safer profit target. even if you're going for the 200%. Okay, so now, Bill, that you're seeing this, I'm not sure if this helps you answer. It happened to be that this resistance level in here lined up with the 161.8. Generally speaking, if I didn't have this line on here already, what I would do is I would put a line on the 200% extension level, and if I identified a secondary high or a better level of support and resistance, I would tighten it up. In this case, I'd be tightening it up to this area anyway. So it worked out that that profit target for me would be 161.8. Okay. Right in here, it's the @ symbol, percent, $sign. Why did I draw it from the bottom instead of the top of the move? Well, now we're getting into specifics, and I want the course to apply to everyone watching. I'm not entirely sure what you mean. When I drew it on, I start at the top of the price and pull it downward. If I want to go upside down, I have to start, well, here, I have to actually draw. Say I was thinking that this was going to be the range, it was going to break southward, I would start at the bottom and move to the top. No, don't apologize. That's fine. I'm happy to clarify. I know sometimes, though, it can be a situation where, we get so focused on one little detail that the overall message gets lost. So hopefully I was able to answer your question. If not, Bill, email me, Triffany, TRIANY, @triffx.com. There we go. Okay. Oh, Blakey asked a question. I'm sorry, Blakey, it's been forever since I've seen you. Do I ever look at diagonal support and resistance? Well, that kind of goes along the lines of support or of the trend line question asked earlier. And yes, I do. I always keep it in mind, but I want to make sure that I coincide whatever diagonal analysis I've made with a horizontal level as well. It's just been my experience that the horizontal seems to hold much more definitively than the diagonal seems to hold. The diagonal seems to behave more like a fence, where the price can nudge its nose through sometimes. You can imagine, it doesn't always stop the horse. The horse can still kind of stick its nose through and kind of trick you and fake you out a little bit. So I definitely prefer the horizontal line, which seems to be a little bit sturdier in terms of holding price back. But I really like a trend line or a diagonal support and resistance analysis on the yen pairs in particular. I like those a lot. It can be especially in trending conditions. When the market is trending, I love diagonal support resistance breaks. I'll play them up and I'll play the pullback and I'll play them up again. I'll play the pullback. Lots of fun. I like that. We're just in really choppy conditions today though, so, well, this week. I really think it's going to just be this week. Okay. How are we doing on time? We have about 10 more minutes. I could do this real quickly on another pair, or did you guys just have some more questions? Is it difficult for you sometimes to not trade? Who has a problem here with saying no to trading? Can that be hard? No, I don't use moving averages as support and resistance. The only moving average I have on my chart sometimes is an 800 simple moving average, and I kind of use it keeping in mind that that can act as a home base. When the trend starts to get tired, price can return to that after a couple different waves, attempts at the 800 simple moving average, but I still don't use it as a profit target or as support and resistance. I use it kind of as a gauge, and then I'll put in, I'll find areas of support and resistance around that moving average. Yes. Oh, see, look, we have people here that have a hard time saying no to the chart. Isn't that interesting? I think what happens is, we just put so much time into learning how to trade, and there's a lot of pressure that's built into, once we've studied a system, once we've looked at how we want to trade, we start to do the math. we say, well, yeah, this is successful, but what if I took it on 5 different pairs? Or what if I took it at all times of the day? Or what if you don't want to miss any setups. There's such a pressure to be on the chart and in the market at all times that it's a really common thing for people to struggle psychologically with the decision to stay out. And there's lots of times when that's the absolute smartest thing to do. What I encourage you to do, if this is something that you struggle with, if it's hard for you to stay out of the market when things aren't lining up, it's a really good chance for you to go back either to your back testing or do journal review if you're keeping a track of I always tell people keep at least a trading journal. Even if you're not keeping a personal journal, I always recommend both, but at least a trading journal. Make that a time that you go back and review what you've done, what has been successful. And that serves as a couple different tools. For starters, it serves as a great way for you to just do something that feels trade related and can help keep you from trading live in conditions that don't support your trading style. The other thing it can do is it acts as a positive reinforcement, because in the trade review where you traded during the times that the market did support your trading style, you can remind yourself while you're staying out now and that this is actually a good decision. If you're doing a trade review and that's not the case, it's not a positive reinforcement, then you can still say it's a lesson to be learned. Oh, look, here were conditions that didn't make sense for the way that I trade. Okay. And what you start to do, I call it mining your data. What you start to do is identify for yourself the circumstances where your trading is working and the circumstances where your trading is not. Some people don't know when to stay out, right? I mean, but that trade review, if you're feeling doubtful, if things don't feel right and you feel like you should stay out, but you really want to be in, and what if you miss that one big winner that would make up for those other losses? You start to play these mind games with yourself. That's a perfect time to step away from the charts, go back to your trading journal, evaluate what works and what doesn't, and then take a lesson forward when the market kind of evens itself out and becomes a little more predictable again. That's my advice. You guys are not alone. Look at all the yeses in here. There's a ton of people that have this problem. I worked with a student one time that he couldn't stay out of the marketplace. He couldn't. There was some compulsion in him that he did more damage to himself psychologically by staying out than he did by staying in and taking losers. And that psychological component is so huge. So what we did for him is we opened up an account that had the ability to trade for pennies per pip, actually thousandths of a penny per pip. We opened up a separate account. He was allowed to lose $50 per month trading compulsively. And any of those compulsive trades that fell outside of the conditions that worked for him, outside of his trade plan, outside of things that made sense, he had to go to that account to trade it. So, he could take loss after loss, but psychologically he felt better by being in, but he didn't take a huge loss to his capital. So sometimes you have to kind of get creative and think about what works for you. Let's see. Let's see, now I've blithered on. I've been asked for the euro yen, and now I've talked. Radio starts. I'm sitting here in front of the PC all day, so I feel trading is what I should be doing. Yeah, it can kind of feel like it's something you have to do. But remember, there's a lot of other things you can do that are trading related that will actually support your trading when conditions ripen. So definitely. Can I talk about what I look for to take an entry? Yeah, if I'm awake for it, David, I'll take a close outside the area of indecision. So for me, if this is my area of indecision and I'm awake, I'll take a close outside that box. I like my stops to be 2 minor support and resistance levels inside that box. So if I get a little candle here, the bottom of that candle is usually the first one. The next one would be below the next area of support and resistance. So it usually puts my stop loss almost to the halfway point of the overall box. That's what I like to do with my very first position. If I'm not awake for it, then I wait for the bounce. If this prints 1 candle, 2 candles, 3 candles, and it almost hits, I don't get impulsive about those last few pips. I actually wait for it to come back and bounce. Because as we know, it's really typical, right? We get 1 push forward, 1 pull back, 2 pushes forward, pulls back, and that just kind of happens. So I'll wait for that entry as opposed to chasing the trade. I hate chasing a trade. I used to be terrible about it, especially because I used to trade strictly patterns on the daily chart, double tops, double bottoms, head and shoulders, hated wedges. Anyway, regardless, my point is I felt like if I had missed that entry point, that regardless of where it was at, because I was absolutely certain it was going to hit the profit target, I would get in anyway rather than wait for the pullback, which meant I had a horrible risk to reward. And then started playing mind games because as soon as it started to pull back, I second guessed where I got in, and it was just horrible. So, chasing a trade's not a good idea. How can I identify positive or false breaks of support and resistance? That's a problem. You can't. You don't know. You really don't. I mean, look at this nice candle break right above this resistance level. Look at all that conviction in that candle. Granted, it happened on the heels of all of this enthusiasm without retracement, so that to me would be a risky time to get in. However, if you were going just off of this candle, doesn't that seem like, gosh, you want to jump on that bandwagon? You don't know if it's going to be a bandwagon or if this was just the market putting on the brakes too slowly. So what I always recommend to people, and try this in your back testing first, please, 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 start with a small position and then wait for the pullback and look for bouncing behavior. And then you can start to add, or whatever that thing is in your head that's going to make sense to add to your position. But I strongly encourage letting that first position be as small as possible, because it's much harder in currencies than it is in equities to keep those losers small. It's much harder because there's just so many fake outs, and you can keep the losers small, but you might have so many of them because the fake out, think of the difference in volume in the marketplace. They're trying to put the brakes on billions of dollars all at once, and it just, you're going to get those little fake out behaviors. It's very, very difficult. So sometimes you have to be willing to say, hey, it triggered the way I wanted it to trigger. I'm willing to take it. If it's a fake out, I'll get out and I'll know. My line in the sand is, for me, it's 2 minor support and resistance levels. For you, it might be, 50% of the overall move, whatever it is that you develop in your system. For those of you who are new, I am seeing some new names here. I love telling you how I trade, but my encouragement is always, always for you to figure out how you trade. That's always going to be my advice. It seems like such a simple thing to be able to just follow someone else's rules. And well, they've already done the work, I'll just trade like they trade. But you don't think like I think. You don't see the charts the way I see the charts. You read price action differently. You trade during different times of the day. We have different influences and different frames of reference for the way that we perceive news and price action and everything else going on in our lives. So I strongly encourage you. I love that you're here. I want you to come back always. I love that you come to FX Street and you listen to all the wonderful teachers here. But I want you to kind of categorize the information as being useful to you or not. And once you've categorized it, I want you to test it. I want you to put it to the test and make sure that it really works for the way that you're able to trade. Because no two people are alike, therefore no two trading systems are alike. I could have you sit next to me and I could say, do what I do. And you're going to have an entirely different visceral reaction to the way that I trade than I do. And the chart is going to speak differently to you. And as soon as you're away from my desk, as soon as you're off on your own, trading what I trade, without you even realizing it, you're going to make changes to it anyway. So rather than make changes subconsciously or out of fear or for the wrong reasons, consciously and with presence and deliberately, I want you to take what you're learning and put it on some historical data and see if what I'm saying makes sense. I get asked all the time, look at my support and resistance zone here. I've knocked off the wicks and the shadows. I'm surprised nobody brought it up, actually. Usually somebody does. That might not work for you. That little muddy zone that's created by this little area of indecision outside of the larger area might be a lot of fear for you. If something barely closes but is still within this shadow, that might be a really difficult trade for you to take psychologically. Where for me, it's like, oh yeah, that's fine. I don't give it a second thought, because based on my experience, I like my line in the sand on more bodies than wicks and shadows. So anyway, that's my soapbox. I have to do that almost every time. So those of you who are new, you got to hear it. Those of you who are old, sorry. Let's see. Apart from support and resistance, candlestick analysis, the 800 period moving average, and trend lines, which other indicators do you use? I have a MACD with default settings on my chart, but I don't really use it. It doesn't trigger a trade for me, I should say. It never triggers. It's never a reason to get into or out of a trade. Sometimes in the case of, we were talking on the daily chart, how with that trend line we started to see this double bottom almost right here form with these severe support rejections. Sometimes I don't get that sentiment in the price action, so I like to see if there's divergence as a second indicator to price that the trend might be slowing down, that it might be time, but it doesn't trigger anything for me. It's not ever a deciding factor for anything. It's just more of a, hey, FYI, just so you know, buying sentiment is dropping off. I don't use it. Fuji asks, it's nothing wrong to sit on your hands when price action is consolidating. No, nothing wrong at all. What time frame do I use the 800 on? All of them. David says it's like cooking. Everybody makes it a little differently. Yes, exactly. That's exactly right. Yeah, we all have different. I did a webinar once, actually shortly after Thanksgiving, that I shared a crock pot recipe for leftover turkey, and the whole point was to illustrate that thing exactly, that here are the changes I made to the original recipe because these are the things that I like. And here's the changes that my family makes because these are the things that they like. And these are the things that they add and, blah, blah, blah. Same thing. We all like the same dish, but if you were to look at our 4 different plates, we've all tidied it up differently. So that's a really great analogy. I love that analogy. That's right. Oh, that's so great. To me, trading is like dancing with your favorite song. Your song is up, you dance. If not, then you sit on the side and wait for the next one. I love it. Bill asked, what do I think about stochastics? Have I ever used it? Yeah, it's fine. It's another oscillator. RSI is another one that is a decent one to measure just, how much buying and selling momentum or enthusiasm, I like to say, rather than momentum, because if you view oscillators as momentum gathering, you're viewing them, I think, inappropriately, because all they can really do is tell you what has happened in the past. They're not really good predictors. That's not to say you can't find a system that works with them, but generally even those systems have denied a major part of the move by the time an oscillator triggers a trade. And if you're using oscillators, they're wonderful in trending conditions, horrible in consolidating conditions, because once things are going sideways, they're giving you signal after signal after signal and just churning through any profits you made while your trading was in a trending phase. So just keep that in mind, that anything other than price action that you're going to have on your charts is historical. It's that simple. It can only tell you what has happened. That doesn't predict in any way. The only real-time indicator we have in making our buying decisions and selling decisions is price. Excellent. Great questions. What's the best time frame that I've tested to give best clues? Clues about what? I don't understand the question. I'm running out of time, so I can hear myself start speeding up here. Could you mention in points what do you depend on? For example, fundamental, 2 or 3. Okay, price, number 1. Price is king. Support and resistance, price. King. Always price. Number 2, for me would have to be, 3's got to be fundamentals, but number 2 has got to be kind of, the phase of price. Do I feel like it's about to break up with, a built-up inherent momentum that's going to drive price, or do I feel like price is tiring out? So yeah, those would be probably the top 3 things that I go through in my head. I do like when the fundamental calendar, at the very least, seems to have a consensus. If it's Euro news, I don't want to see good news, bad news, good news, bad news. I want to see one direction or the other. If it's dollar news, the same, I want to take country by country, economy by economy, and I want to see some driving consensus. Because even if that news report is wrong, I can get in on the momentum of the forecast, right? If the market's all on board that it's going to go one direction, they're pricing that in ahead of time, and I can be a part of that. But if they're going back and forth and they don't even know what they're going to be buying or selling even before that announcement, I don't want to get churned up in that. That's just too difficult. Okay. Yes. No, that's fine. I'm getting a little blip here that I've got to finish up. I am so, so glad that you guys are here. I hope that you'll come check me out on my website. Let me just pop that up here really quick. www.triffx.com. I'm supposed to, my web developer says I'll have a new site ready tomorrow because the one right now is kind of clunky. But you can come see me anyway. You can register for free to be a part of the blog, my watchlist webinars, that sort of thing. And of course, every 10 weeks, I have a trader development course where I help you work through your own psychological stuff and help you build a system that works for the way that you see the chart. So that's my most favorite thing that I do. I love it, love it, love it. So I hope you'll consider that. The next session starts May 10th. Thank you, Maud, Vicki, Adinda, for letting me be here with you today. I really appreciate it. Those of you who've joined in the webinar, I hope you'll come back and see me. Those of you who do come back, thank you so much. It's so nice to see the same names in here and just know that I have everyone's support. You guys are fantastic. I'll see you next Tuesday. Please be good to yourselves, and I'll see you next time. Bye-bye.